Good afternoon, everybody. Welcome to Trader Merlin Show for your Hump Day Wednesday edition. Nice ending to our market out there today. Was kind of chopping back and forth, and all of a sudden that last little hour was great to see the nice little pop to the upside. We'll talk about the markets in detail through today's show. As you guys may have seen, this is the marketing piece for today's show, talking about the kind of Trader Merlin's portfolio, what I'm in, why I'm in. And the reason I did this show is I've had multiple questions about me making stock picks and why don't I make stock picks and why can't I do more picks. Number one reason is do your own research. I'm not here to make picks for anybody. I'm just here to talk about financial markets, two-way discussions. You guys can throw ideas and thoughts at me as well. But I don't know, I kind of get annoyed at making picks and calls, and certainly having somebody threaten to sue me years ago because they lost a lot of money on a pick where they didn't follow any of the rules, entry, stop loss, or price target, just made me go forget the whole idea. So not going to be doing anything where I'm going to be giving picks in the future, so don't ask me. But I am going to go into this question, which was from Mario. Mario says, since you don't want make stock picks on your show, can you show us what positions you're in with a smiley face? And I thought, you know what? That I can do, but I do need to say with an asterisk because, as you know, I can show you a glimpse of what I'm in, but those positions are going to change on a very, 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 very short basis. I mean, I may be in something for a couple days. I might be in something for a couple weeks. I might be holding things for many, many months, as I have with silver. So it's going to change, but what I thought might be kind of interesting for you guys is I'll walk you through the current positions that I have as of today. And I actually just went through. I have a couple accounts I didn't get to, but most of the accounts are summarized here. And what I'm going to do is just walk you through each one and explain. Here's the logic as to why I'm doing that specific trade. You may not agree with those trade setups. That is absolutely fine. I'm okay with that. If you don't disagree with the positions I'm in, doesn't matter to me whether you agree or disagree because I'm the one who has money on the line. And if you don't like my trade, then take the opposite side and we'll see where things end up down the road. So, I apologize, I didn't mean to make that sound condescending. It's just, I got to trade how I see fit, and some people don't agree with my style. Totally fine with me. I have no problem with that. No one has to agree with what I do, say, or how I act. So let me go and start here just by... I love my graphic. I was going to do the Q&A show today, and I thought, you know what? I might just make this whole show about the portfolio. Liz, we should all be responsible for developing our own rules and backtesting them. You're absolutely right, Liz. The problem is the vast majority of people, and I've been teaching trading and investing since 1998. So, I mean, hard to think, and crazy to me to think that I've been working with traders, whether it's on a one-on-one or big classroom settings or auditorium settings, helping people understand how markets work, how to trade, for 24 years. And I know this sounds bad, but the vast majority of people just want the free lunch. I'm sure many of you have taken an online trading academy class and you sat in there with, let's say 25 people in your class. Out of that class, I don't know how many are going to make it. But the reality is a lot of those people in that room are thinking, just tell me what to buy. Just give me a stock pick. They don't want to do the effort. They don't want to do the research. On the contrast, I'm the exact opposite side of that, where I learned from my instructors, and I was so excited to learn how trading and investing worked that it just became enamored with it, and I love to dig deep. I love to go behind the scenes and see what institutions are doing, how they're playing us to do their bidding for them, right? How does somebody like Jim Cramer, yes, Jim Cramer, how does somebody like Jim Cramer take his media exposure on CNBC and all those different pieces and pump securities that he needs to move up, right? It's all one gigantic game. So anyway, enough said with my disclosure statement there. So these are all current positions that I have open as of close of market today. Here we go. I'll walk you through one by one and then we'll discuss. So I kind of broke it up into three major sections. I kind of have equity position holdings right now. I have a few options, and I have obviously a lot of crypto, which we can address later on. Here we go. So number one, I'm long the triple Qs right now. And the main reason I'm long triple Qs is a couple months ago, I sold some puts on the Qs, and the puts sold off aggressively. If I'm not mistaken, I think I sold the 316 puts. I was exercised, and my average price is 311, right? So let me go here and show you the QQQs. I don't have the levels on, but I had been selling puts for months. It's been a lot of what I do is selling puts out there. And the main reason is I want to get that consistent income. So let me change my coordinates here to 316. Been in this one for a little while. So there's 316. So I sold the 316 put probably back here on August. Yeah, my guess is it was probably right here as the September contract became the main contract, and the premium I got was great. I sold the 316s. I ended up getting something like $4.50 or close to that in premium. So great, I'll take over 1.5%. It was under 2 weeks. Well, lo and behold, we had this big drop down here and exercise me. No problem. As soon as that happened, I've been selling calls against that to further lower my dollar cost average. And I'll show you what that is right now. Overall on the QQQ position, it's one of the few negative positions I'm going to show you here. Most of them are positive, but this one is negative for the time being. I think I'll actually be okay here in the next week as it looks like it found a little bit of a footing today, especially the way we close this market today. So that was number one. Number one is the triple Qs. Again, I sold the 316 puts. I was exercised. My average price, I believe, is like 311.50 somewhere in here. So obviously underwater on that one at this moment, and that's by far my biggest losing position I have. However, I also did sell some calls, which I'll get to in just a minute, which has further lowered my cost basis. I believe with those calls in place, my average is right around 308. So I'm definitely down 12 bucks per share on this one, which is not the end of the world for me, and I'll hopefully continue to sell calls against my position to lower that average even more. All right, next one. I am long. I'm long USO. Now, oil has been, I've been holding this one for quite some time. Here is USO. We normally don't talk about USO. So I've given back a lot of gains, but I've been in this one for a couple of years now. And I've just been holding it. Back when we got down here, when we had that negative $41 print on USO, on crude oil, I tried to do whatever I could to buy oil. And it was funny because my brokerage firms were cutting me off and not letting me access markets. You may remember this. I'm not showing the chart. You may remember this point way back down here. Brokerage firms and exchanges weren't actually letting you trade oil products. They weren't letting you trade USO. And it was like, wait a minute, hold on a second. Why can't I buy it? You couldn't trade the doubles. Even futures markets were limiting people to some extent of what you could access. So, yep, I'm getting the chart there, Alan. It should pop over in just a second. There you go. So I actually bought some way back down here in 2020, and I've been holding that ever since. And I'm going to continue to hold oil for a while. I'm not a big fan of using futures-based ETFs. So for those of you who know USO, it's not like it's a diversified portfolio of holdings. It's simply futures products. And I'm not a big fan of that because there is some decay over time. The contango backwardation discussion we had with John Rowland does play into it. So definitely giving back a little bit of the gains I had on that position. But all in all, I'm doing very well in that USO position. And it's not a huge position by any means. So those are the main two. And then my largest holding right now, and I've got a lot of it. I mean, I'm upwards of almost 10,000 shares of SLV, which is a pretty sizable position. Let's bring up SLV. This is probably my riskiest position I have on right now. And the reason I say riskiest position is I'm bullish on the dollar. Let's start with the dollar index. So here's your dollar index, which has been trending the upside. The more that this continues, the more vulnerable silver becomes. However, I think silver, at least from my perspective, is critical for things like solar energy, right? The solar collectors use a lot of silver. It's one of the more consumed metals for industrial purposes. So I think it'll always have that aspect of utility. And if solar continues to grow, of course, silver starts to be used even more. And I think that demand might push it up. But I am I'm not a rock and a hard place. I'm in a bit of a conundrum, right? Because I'm bullish on the dollar, but I'm also holding long silver, which should actually get hurt if the dollar keeps rallying. However, I look at this price chart of SLV. It is definitely in a big downtrend. And great thing about this one is I'm long on it, but I'm also selling covered calls against it and been generating some great premium, right? Great premium on SLV, even though it's only an $18 security. I mean, you can find yourself getting 2, maybe even 3% for 1 month of holding it. Now, if I can get, let's say, 1% If I sold out the money today, I would get way more than 1%. But I'm looking at, generally like 8 or 9% lower than market is where I'll be selling puts. And then depending on what's happening with current price, lately I've been selling them just slightly higher than current. So if we expire tomorrow and don't get exercised on any of my put options, my call options, I'll probably sell the 18s or the 1850s again on my position and collect a boatload of premium. So I love doing that. I love looking at things and holding an underlier and selling options against it to collect premium. I'm not going to get the grand slam, right? I'm not going to have the 10-to-1 reward for it, but I'm going to generate consistent income. And at this point in my trading career, I think my objectives are a little bit different than they were when I was in my early 20s. And my objectives are, my goal is 100%. I want to see how consistent I can get it. And if I can get a consistent income that I can predictably make month after month after month after month, then you have the goose that lays the golden egg. Because you can identify what your average monthly expenses are. You know what you should be spending and how much you need as income. And if I can take my trading accounts and make that income just with the trading accounts, well, then you're free, right? You are home free, can do whatever you want, travel around the world, do anything, and I'm trying to do it in as simple as possible manner, which is generally hands-off and selling of options. That's I want to say a majority of my trading has been options lately, but I've been doing a lot more options as well as a little bit of crypto. Do you have stops on either protection on SLV? Could be tricky on covered calls. So no, I do not. And the main reason for that is if I was in an individual security, so let's say I was in Apple, I need to be concerned about the downside, right? I need to be concerned that something happens to Apple, some regulatory action. I need to be concerned that Best Buy might go bankrupt. I need to be concerned that GameStop loses all their money and they go bankrupt as well. So with silver, I'm looking at a commodity that everybody around the world uses. And with global tensions like what's going on with Russia, that could certainly impact the supply of silver and other precious metals. So that could drive the price up. So I don't have stops on SLV. I have them on Qs and I have them on USO in the system now. But I'm not selling options against my USO. I am selling those on QQQ. And the way I've set it up is basically a spread trade where it will take care of itself from a stop loss perspective. So silver, I do not have stops in the system. I have a mental idea of where, okay, enough is enough. But I'll be honest, I think if silver continues to drift lower, I'm fine. I will continue to sell. So let's say that by the end of the year, so here we are in September, October, November, December, the next 3 months, let's say silver drops another 5%. Well, if silver drops 5% by the end of December, I will be selling call options against that and earning more than 5%. So I'll actually make profit if it declines in price. The only area where it really hurt me bad is it was a massive sharp drop down, and I don't see silver going from $18 to $10 anytime soon. But no, it's a little bit different with the commodity side of things for me. What broker it is, I'm using mainly retail brokers, GS. So I've got TradeStation, which I don't really use anymore. I have Interactive Brokers. I've got Schwab. I've got E-Trade. Ooh, I didn't even put in all my E-Trade positions. Ameritrade. And that's just on the equity side of things. Futures. Futures I still have TradeStation. I have money sitting there, but I haven't really used them much. And I'll use Trade Pro Futures. And then Spot Forex was Awanda, but I really don't do much Spot Forex anymore. Let me get to that in a sec. Alan's asking how far out I will go. So real quick, let me just make sure. I just want to make sure I get all your comments as we got. If you're trading my money, I may have the right to set rules. If you're trading your own money, yep, exactly. My money, my rules. And again, maybe people don't like it. People just want to be spoon-fed. Totally. It's crazy. You know what? Years ago, I went to these workshops. There was a thing called, I don't know if it was Invest Tools, but it was a red light, green light system. And what I noticed in there, and I went to one of these just to see how they did their sales practices. And you want to talk about slimy, sleazy sales practices. They did something very interesting. And I'll just throw this out there for anybody who may go to any of these events. What they'll do a lot of times at these events where it's a red light, green light system or an indicator that saves the world and is going to make you a ton of money, they'll do this. Ladies and gentlemen, today's going to be an interesting presentation. You're going to learn things that you've never known before. There are so many simple things you can do to make your life better. I'll give you an example. How many of you right now have a specific credit card limit? Oh, you do? I'll bet you that I can get that credit card limit increased right now. What? Watch. Let's take a break. We're going to take a break right now. What I want everybody to do is I want you to get on the phone, pick up your credit card, flip it over. I want you to call that number on the back, and I want you to just say, I want you to raise my credit card limit. And of course, people are like, all right, well, let me check it out. I'll get a more credit card limit. But what they've done is so strategically brilliant. They've basically convinced you to call your credit card company, increase your credit limit, which they will do. You call your credit card, most likely they're going to increase your credit limit, right? It's easy. You just have to ask. But now you come back in that room and they know you've got an extra $4,000, $5,000, $10,000 on your credit card. Now I can spend more money. Let me show you my software that's a total scam. Anyway, I will digress here. Let's see. Do you have stops? Do you hold physical silver or gold too? I do. Actually, I don't own any physical silver. I own physical gold, but I am in. I actually have the GLD put options right now, so I'll probably, as of tomorrow, own some GLD as well. Margaret, can you show us your zones that you use to enter those trades? So I will try to remember. Let me get to the options side of things, and then I'll show you that. How far is the max that you will go to sell covered calls to get 1%? I don't have a max. I basically look at that moment and say, okay, what's the probability of it getting to this level, or where do I think directionally this market may go? So for example, when silver hit 8, if you look here on SLV, it's actually a really good example. So just a couple days ago, you saw silver spike up, right? And silver, right here on this candle, hit a high of 1843. And I'm looking at it going, man, I don't think that it's reversing. I think that it's just a big emotional bounce. So on that day, I sold 1850 calls against my position, and I got great premium. And if it ended up rallying higher, fine. I would have, gotten rid of my SLV. If it doesn't, I'm going to collect this huge premium that I collected and just keep that and still be in the position. So I could have sold the 19s, 1950s, the 20s, wherever, logically the 19s would have been a good spot because that's where price looks like it may head. I don't really see anything between 19 and 18 that acts as a great supply zone. So it was more about this candle and the move that happened and what premium I could get, what my belief was on that position at that moment in time. Now, what's the worst possible scenario that could have happened here? If I sold the 1850s, which is right here, and it continued to move up, oh well, I may have to get rid of my silver, and anything above 1850, I don't collect the gains on. That would suck, especially because I'm in a lot of silver. The best thing that happens is it sits here, and tomorrow it closes at 1849. Just below that 1850 mark, I get to keep my shares. I made all that extra profit, and I collect the premium. Bob's your uncle. That's the best thing. The worst thing that could happen is silver just absolutely melts down tomorrow, and it's it's at single digits. I don't think that's going to happen. So it's about weighing outcomes and probabilities here, and that's really what I did with my SLV. All right, so that is the SLV. The three main long positions I have right now in ETFs. I don't own any individual securities at this moment in time. So let's go to the options side of things. Now, just for those who maybe not know options, if it's a plus sign, I'm actually forgetting one on here. I'll add it at the end. If it's a plus sign, it means I'm generally long those options. If it's a negative sign, I have sold those options. So you can see the first one here is I've sold the September 16th calls, 312. As I mentioned, my average price in is at 311. I think 311.50. So if I look at the price chart here of QQQ, even though I was exercised at 316, with the premium collected, let me draw some more lines on here. I apologize if this is confusing. If it is confusing, please just say, hey, I'm confused, Merlin. Explain better. Let me get those out of there, and I'll add on a horizontal line here. So if my average price on this is 111.50, which is roughly there, where that blue dashed line is, that's my average price. So even though I sold initially the 316s, I was exercised, I'm still only at 311.57 is my average. What I did is I sold the 312s. So if it gets above 312, I get rid of my shares and I will still make money. I will still be positive. Now the rate of return won't be as good as I wanted it to be. I sold those 312s, I believe it was actually a couple days ago. It may have been right here because I got great premium for it. And, odds are it's going to expire worthless. So I'm going to keep that premium on these options right here simply because I doubt we're going to see 312 print by end of day on Friday, which is, you can see it's the 9/16, so that's September 16th, 312 calls. So basically, I'm using that to earn more on the position of Qs that I have, and if it continues to stay down here, fine. If it rallies back up, then I will keep my premium. If it rallies higher than 312, then I will sell or get rid of my long position in QQQ. If it doesn't go above 312, I'll simply sell calls again sometime next week against the position I currently have and earn more income that way. What else do I have? So that was the 3. I also am okay owning a little bit more QQQ. I think we're probably going to bounce here a little bit. So what I did is I sold the 288s. I got some great premium for this. This is for next week, though. This closes not this Friday, but next week on the 21st is when those options expire. And, 288 is not that far off. Let me change the dynamics here a little bit. Go 288. Okay, and the reason I sold the 288s is I earned about a 1.5% rate of return on those. I think, if I'm not mistaken, I sold those yesterday. I don't know. I make a lot of trades, guys. So I think I sold them yesterday after this climactic sell-off to just collect a lot of premium. As you guys saw, the premium was off the charts. It was, if I remember, it was at least 1.5%, close to 2%, but just for a very short period of time. Now, does the NASDAQ get down to this line by next Friday or next Wednesday? Maybe 2.7%. It could easily get there. But if it does, I'm okay with that. I'm all right with that, taking that chance to collect that kind of premium. So NJ says, I thought you got 30 days before expiration. If I'm selling, it's 30 days or less. A lot of times, if I can, I'll actually try to do a weekly. And if I can find enough meat on the bone, like there have been some great trades the past couple months because of this volatility where like literally for a 7-day trade or a 5-day options trade, I'm going to get 1% premium. Do it, right? Oh, sorry, guys. I keep doing that back and forth. Thanks, Glenn. So there's the chart again. I'll leave the chart on here so you guys have to see me. But you guys, for those who are option sellers, I'm sure Tom as well, there are, a lot of premium when they have this market volatility. So yesterday was golden for me to sell puts because everyone wanted puts. The premium was off the charts. Now, again, here's the line that we're looking at. This dotted line is the 288. That's not that far away, right? For it to fall from current price, which is 296.85, down to 288, it's 2.7%. We could easily get there by Friday. But I think that given the data today, we'll talk a little bit about the economic data that came out today, not as bad as expected. So I think you might actually see this drift up here over the next few days. But we'll talk more about the Fed announcement next week. But that's my thinking on why I sold the 288s. It was just there was great premium, and I'm actually okay owning it at 288. I would instantly sell calls against it. Now, the good news is it's about a week away, right? We are currently on the 14th, so it's literally 7 days away. Next Wednesday is when these options expire. If they expire and price is below 288, I will instantly sell calls at the money. Margaret, this is where I'm going to make enemies. I don't generally look at implied volatility. I know, and I'm probably doing myself a huge disservice in doing that. Generally, I'm not looking at implied volatility. I'm looking at what rate of return am I going to achieve. Now, I know that if the market's in a real bullish phase and I'm selling puts, I know the premium's not there. So I'm generally not going to be selling puts as things are rallying. I'm actually looking at selling calls against current positions. And if I find that I might be in a real strong trending market, I'll buy the underlier and immediately sell covered calls against it to increase my rate of return and sell those calls at a supply zone where I think it's going to stall and turn anyway. Dave says, what do you mean by 1%? Is that 1% of the 1% rate of return on the investment, right? So if I'm going to invest $100, I better be able to make 1% over whatever time. And that's just a number I have for myself with options, the way I sell them, and I'm predominantly a seller. I do buy directionally. I have a couple of positions open directionally right now. If I'm selling, I want to make sure that there's enough meat on my bone. And I know that through the math calculations that I've done, if I can get 1% of my accounts, then I'm set for life. So 1% per month. But if I can change that and get, let's say, 2% per month. Lately, it's been 3% per month, which has been like shattering my averages, which is fine. But remember, I know some of you going 3% a month is not enough. I need 30, 40, 50%. Well, I don't want to take those kind of chances. I'm striving for consistency and just base hits all the time. Lately, because of the volatility, I've been getting a lot greater premium. So there's been times where, like I said, a 5-day trade gets me 1 or 1.5%. Silver has been great at this, at giving me really great rate of returns. How do you define great premium? 1% a week, 1% a week out? I would say that if I can get 1% rate of return for a week without putting myself in too much risk exposure, I would call that great premium. For me personally. For some others, it might not be. But, I mean, you just think about it. If I can get 1% rate of return per week without taking big risks, that's 52% per year. You consistently do that. It's not about that 1 year being... that 1 year's, how do I phrase this? Because I know there's been years where I've had 200, 300, 400% rate of return per year. But to do that, I have to take a lot more risk. I'm swinging for the fences, and I don't have the intestinal fortitude anymore to do that. I think once you suffer a couple big swing and misses, you guys saw one in 2020. That was probably my last really big swing and a miss, which was 68 grand. Those take their toll. But if you can set up a number and say, okay, if I earn X percent, even 1% per month, compounding for 12 months a year, that's 12% rate of return. It's actually higher because of the compounding, probably closer to 14%. Now I do that every year. After 5 or 6 years of this, you're huge money. And that to me is the difficult part. Have you ever asked your broker to lower your commissions? Yes, I have actually, and they did. But that's when I was doing, hundreds of trades per day. I don't do hundreds of trades per day. I would say daily, maybe 1 or 2 trades a day, and it might be readjusting positions, but 1 or 2 per day. I don't do a lot anymore, so I don't think I would be given any leeway by these financial firms and say, hey, we'll give you a better deal on commissions. Let's see. So no, I don't use implied volatility. We'll give you 1%. In the big fall, it is good for selling. Don't need exactly, Karen. That's exactly right. Like yesterday. Yesterday was so great. It was one of those days where I would just sit back going, wow, there is huge opportunity. And you could just see the premium. I'm looking at it going, you're going to give me 1.5% to hold for a week? I'm in. And it's something I wanted to hold anyway. So, yes. All right, I got a lot more to get through. Let me go through some more options here. I also sold the October 21st 270 puts yesterday. There was great premium on that. Even though it's a little further out of the money, there was great premium here, and I'll show you why I chose the 270. We'll go to QQQ. If I look at this chart, I look at 270. Where's the next, the major demand zone? It's down at the lows. It's down those lows from June. So I sold the 270s and earned incredible premium yesterday. I think I got over 1%, but remember, I'm also committing myself for October. So if the Qs fall all the way down to 270, fine. I'll own it. It's if we get below 270, then I got a problem. But that, to me, that was a great premium that I earned. And again, those were added yesterday. I normally, if I have a negative mark in front of them, I will normally hold these all the way through to expiration. So I'm fine holding at expiration. Liz asks, suppose you are assigned on short puts. Do you immediately want to sell calls? If price gaps down in the morning, you own them. You sell calls at the money or the strike price you're assigned. I don't have a hard, steadfast rule for that. So let's just use the last options that I sold, which are both on the screen here, which are going to be the September 21st 288s and the October 21st 270s. Let's do the middle one there, the September 21st 288s, right? So I'll zoom out here and I'll just look at the 288s. And we'll go September 21st. This vertical line is the day those options expire. So I have between now and that vertical blue line for price to stay above 288, which is this lower blue line. Now, let's say that on next Wednesday, gaps down, my options are going to expire at the end of the day, but now all of a sudden it's at 280, right? Way down here. And it could happen, the way things have moved. So if it's at 280, what am I going to do? I'm going to be down at this point. So first off, I don't know offhand how much I earned on premium, but let's say the 280, I probably got, let's see, it was 1.5%, which would be call it almost $4, which makes my average price no longer 288. It makes my average price 284, which is right here. Okay. So if we gap down to 280, I'm going to have to reevaluate that morning and see exactly what I want to do. But if I can sell those 284s and collect another 1.5% premium, I'll probably do that. So it's really more of a math calculation when it happens and what the price is once I get exercised those shares. Oh, I'm not showing you the charts again. Gosh darn it, I always do that. Sorry. I'm trying to talk too many things over here, but your charts are coming. Here come the charts. It's about a 30-second delay. There it is. And wow, it is way long delay today. Come on. It should already be there. There it is. Jeez Louise, that was like a minute delay. Okay, so again, I've got the 288 in blue here. That's those strikes I sold for September 21st. Again, if we gap down and all of a sudden it's at 280 by the time Wednesday the 21st, well, my average price is roughly 284. Even though I exercised at 288, I collected about $4 worth of premium. Therefore, 284 is my average, okay? So when that happens, or if it happens, I'll have to reevaluate that position that morning, Thursday morning, when those QQQ shares are in my account. And then I may sell the 284s if I can get good premium for it. But it's interesting because for me the key is you can't panic, right? I'm not worried that I'm going to get exercised. I'm actually okay with it. All these options I'm going to show you, if I get exercised on any one of them, I'm absolutely fine with that. The worry with these options right here is time. So you can see the QQQ 921s. Look, that's 7 days. I don't think the market's going to go that crazy in 7 days. But look at the second ones, was October 21st. Now I've got another month on top of that. So, a lot more can happen in that window of time. What else do I have open? Tesla. Yeah, I actually, I sold some puts on Tesla. Strange for me. I don't normally trade Tesla, but I just kind of felt like it was doing pretty good. I think that this sell-off because of the split was going to be short-lived. And as it had this hammer formation, as it ripped up here and started moving higher, I decided to sell some 270 puts. Now, the vertical or horizontal line here is at 270. Of course, it's in snap mode, so we'll just go 270. I am sharing my chart correctly this time. And notice, if I had to say I want to be a buyer of Tesla, where would it be? It would be at the 270 mark. And the premium on that one, anybody who trades Tesla knows, the premium for Tesla is huge right now. I mean, this volatility has just been crazy for the premium, so I sold the puts on it, collected a great amount of premium. I want to say it was like $5 or $6 for the October 21st, which is great. And again, that lowers my average. So I've got Tesla on there. I'm happy owning Tesla at 270 at this point. If it keeps on rallying, great. Rally up there, Tesla. I don't care because I'm going to collect a lot of premium on the underlier. Next on my list, I got pages of stuff here, guys. XLE. So I guess, let me just show you quickly. I've got XLE, XLF. These are some of the major ETF ones. I mean, notice that almost all of these expire on Friday. I've got XLE 7750 puts, XLF 33 puts, XLY 157 puts, and then this piece of garbage here, Bed Bath & Beyond, I got the 916.8 puts. Now, before you start throwing shade at me and going, what the hell is wrong with you, Merlin, you hypocrite, Bed Bath & Beyond is garbage, you call it trash. It is trash. It's garbage. However, the premium that people were offering was unbelievable. When it was, I'll show you where it was. I was jaw-dropped at this specific trade on Bed Bath & Beyond. Right? So, when Bed Bath & Beyond had this down day at $12, I think it might actually have been higher. I can't remember exactly when it was. I believe it was this big down day. People were fighting for put positions, right? So I sold the 8 puts. Notice where my cursor is. The cursor is 8. I'll lower these lines down here just to make that work. 8 is right 8 is where that horizontal blue line is, the dashed blue line. And I sold them when it was up at 12. So for that to happen, Bed Bath & Beyond would have to have fallen roughly 32%. I'm just curious, and there's a long delay here, but if I sold the $8 put, and I collected 80 cents, that's a 10% rate of return. Yes. I sold the $8 puts, and I collected $2.50 premium on that $8 put. And what's crazy about that is that was back when it was up over 12. You guys see how wild that was? That's just playing off of people's emotions and crazy, stupid volatility. So I was on the hook to buy. I still am on the hook to buy Bed Bath & Beyond at $8. But I collected $2.50 worth of premium, which means that my average price is $5.50, which is way down here. So unless Bed Bath & Beyond craters by Friday, which it could, this will be a great trade. Tons of premium on there. This is one of the more speculative trades that I've made. I don't usually like to trade that stuff, but that one in HKD, I tell you, if I could have sold the $100 put on HKD, I probably would have done it. Although I still don't want to own this thing. Wow, it's up 300% today. Oh man, that is crazy. Do you close those sold positions or let them expire and collect premium? I let them expire and collect the premium. No reason for me to make the transaction, right? So if we look at this list here, we can bring up a couple others just for fun. Let's look at XLE, right? You can see I sold the 77.50 puts. So if it gets down below 77.50, I'm going to own it. Well, that's 77.50 is where my cursor is. I don't think it's going to get there by Friday. So why bother closing it out? Right? Let it expire worthless, and I don't have to pay any commission. I just keep the premium. So that's it. What happens if it goes below $8 tomorrow? If it goes below $8 tomorrow on Bed Bath & Beyond, let's just zoom in here. These are my lines, right? I'm going to scroll up or zoom up here just a little bit because since I collected $2.50 for the premium, which was just, in my mind, that's insane. I've got 3 lines on here, right? The top blue line is where it was when I sold the options. It was above $12, and I sold the $8 put, which is where the middle blue line is. If it gets below 8, then I will be exercised, and I will be long Bed Bath & Beyond on Monday morning. Normally, I would sell covered calls against it. I'm just going to dump Bed Bath & Beyond. I'm just going to dump it, right? If I get it, I don't want it. I think it's trash. I don't care. I just did it because the premium was so high on Bed Bath & Beyond. So the only way that I get hurt is if somehow Bed Bath & Beyond closes below 8 and then by Monday it gaps down below 5. That's the only way I could really get hurt here. Hey. Hey, well, Tom, go buy Bed Bath & Beyond. Go buy something at Bed Bath & Beyond. Keep the shares above $8 because this is one of the few ones I really don't want Bed Bath & Beyond. But again, I'm looking at income stream, and the income was so high. And I believe when I sold those puts, I want to say it was like 2 weeks ago. Yeah, it was about 2 weeks ago. You can look at the chart here. It was back on this day when it was really high. So that was August 30th. So here I am 2 weeks later. And obviously, it was down below $8. It hit a low of, what was our low here? $6.84. Even if that happens, I'm still going to make money on it. All right, it's got to really implode from here. But part of the reason why that trade offered such high premium is because people were freaking out. Right, people were losing their minds and freaking out that they got to get protection. So there you go. Market makers are watching me. I'm such a small fish now. Nobody cares about me, especially not market makers. All right, let me go through. I got a few more. GLD. So I'm a big fan of gold. I am long-term wanting to own gold, so I decided to sell the 161.50s, which aligned with an area of demand, which you can see here on the chart. That's this blue line. 161.50. I don't remember why. Oh, you know what? I've had this one for a little while, and the main reason was we were coming back down. It was right here when I sold this one. So this was an August 29th trade where it was at the money, and again, I earned a well over 1% because I sold at the money. It was closer to 3%. I should have written on the screen here what the premium I collected was. That would have been a little bit easier. This is one of the few that I'm underwater on, including my average price. So if I got exercise at 160, 150, I believe that I am underwater, but not a lot. The trade that I'm underwater the most on at this exact moment is Tesla, and that is at least on the option side, and I'm only down like $150 on that one, which is interesting because I have several of those Tesla put options. I have 3 of those Tesla puts. What are your thoughts on XLF? Thinking about building a position about 31ish. XLF? Well, XLF is an interesting position because with the rising rates, historically, institutions, financial firms make more money. But we really haven't seen that come to fruition. It's been chopping sideways. I would contend that we're building an ascending triangle here on XLF. Therefore, the $33 mark would be a decent buy point. And that's where my XLF puts are right now. Expiring Friday, I'm at 33. So I might actually own XLF as of Friday. And if I do, that's fine. I'm okay with that. It's really this low point here that is of interest to me. If we get down below, let's say 32.50, then I think there might be more downside movement for financials. But otherwise, I'm cautiously bullish on XLF. Not like it's the greatest thing in the world, but I'm cautiously bullish. So I sold puts there. Here's XLY. I have the 157s on that. Again, I'm fairly close. I mean, it might get me by Friday, but I'm not worried. If it does, it does. If it doesn't, I don't care. It's part of the reason it was kind of coming into this area of demand back here, and I did the 157 so I could get a little bit more premium. If I remember correctly, I was looking at the 156s, but the premium didn't give me over 1%, which was my rule for this specific trade. All right. I know I'm probably boring some of you, so I apologize for those who might not be into options. I already mentioned the 1750 or 1850 calls on silver, so that is hedging my entire position of silver using 1850 calls. Again, great premium. Every time I do this, I'm getting 20 to 30 cents a premium on those options, which continually just drops my cost average lower and lower and lower. XLY, that's a duplicate, sorry. And then, okay, so that's my current options ones. And again, starting Monday, it's going to be a whole new set of options, right? A lot of those you saw are expiring on Friday. So let me just real quickly, so I can see the numbers here. 1, 2, 3, 4, 5, 6 of those options are going to expire on this Friday. So come Monday morning, I'll reevaluate and I'll find if there are things I want to sell some puts against on, I might do that. Generally, I'm looking for pain days. I like when I have a huge down day like yesterday to sell puts, especially at levels that I'm willing to own these at. And I'm okay with owning energy or financials or consumer staples. Consumer discretionaries, XLY. I'm okay owning all those and then utilizing my current positions. You can see the only one I'm not hedging on is USO, but SLV and the QQQs are designed to lower my dollar cost average and rake in as much money as possible out of that trade. So that's the current in options. If there's any questions on that, let me know. But what I think is interesting is I only have really 3 major equity positions, USO, QQQ, and SLV, and I'm using options to earn more on it. Now, I'll run through these very quickly. I know most of you might not care about this, but here are the positions I'm in crypto. People ask me this all the time. What are you in? What are you in? Well, here's what I'm in. I'm in Ethereum because the merge is going to happen, and I think that's going to go successfully. It's going to happen at 10 a.m. tomorrow morning, so a cautionary note for anybody using or trading crypto. If you're using anything in crypto, don't do it tomorrow. Matter of fact, you should stop doing it right now. You should not be buying, selling, trading, transferring, or doing anything in crypto for the next 48 hours. Wait until Friday. Let the merge happen, because anything that's tied to Ethereum could have problems. So just hands off, leave it alone for a couple of days. That said, let me run through my positions real quick. Robert, I actually do have one position long right now where I bought calls, which is rare for me. But it's been absolutely a beautiful, beautiful trade for me, and I'll explain that in just a sec. So I got Ethereum, and this is an order of weighting in my portfolio. Where's my cursor? So Bitcoin, number 2. I think Bitcoin is going to be over $1 million in the next 10 years. I've got Litecoin, Polkadot, which is one that's trying to connect multiple chains together. Binance, simply because Binance is trying to dominate the crypto world, and I think they're doing a damn good job of it. I have Tron, which is, I have it because I was really big on it in 2017. but I still hold it today, and I stake on it. Most of these are actually being used right now to stake and earn extra income. I'm staking my Ethereum. I'm staking my Polkadot. I'm staking my Binance. I'm staking my Tron. All of those earning extra yield anywhere between 3% and 15%. Cardano is another crypto I like. That's a layer 1 blockchain. Ripple, I don't like Ripple. I have legacy Ripple, which is, I've been holding it for years. I think Ripple is whatever. I don't really think highly of Ripple, but it is what it is, and I own it. Stellar Lumens, which is actually competing against Ripple, and I think is a better product. I own that one. Matic, Polygon, that's a layer 2 technology on top of Ethereum to help make Ethereum faster. I'm a big fan of Matic. EOS, which is going to have a hard fork next week on Wednesday as well. Let's just call this Phoenix. I mean, EOS is like rising from the ashes here. It was junk. No one wanted it and left it for dead. And now all of a sudden, it looks like it's going to have a nice resurgence here. Chainlink, which is critical. Chainlink is an oracle that allows smart contracts to communicate with outside data. Markets don't function without Oracle, so Chainlink will probably increase in my portfolio. These are some of the other ones. I won't go through them all. If you have questions, feel free to ask at this time about any of these positions that I have open in crypto. If there's something you want to know specifically, I'll read the names very quickly from the top. Middle column at the top is Chainlink, Golem. That's a Crypto.com coin, is CRO. Solana Engine, which is a really interesting project. Cake, which is for Pancake Swap. It's a DEX decentralized exchange. Avalanche, Cosmos, FTX Exchange, Algorand, Dash, Civic Coin. Final column is Wrapped ETH, Aave, Digibyte, ICP, which is International Computer. You have Nexo, which is a lending protocol out of Switzerland. XLM, which is Stellar Lumens, Basic Attention Token, DAI, OMG, and BitTorrent. So these are all holdings that I have in crypto. Again, these on the right-hand side are smaller holdings. The one on the left these are big holdings. Some of these are very, very large positions, which could make some people uncomfortable. But given my belief in the entire crypto space, I think that is a good place to go. So let's go back to the question that came in here. And again, what else do we have here? Do you have any premium? Nope. I do not have any premium dividend stocks. I don't really care about premium, but no premium stocks. I'm not looking for the premium. If I want premium, I'm actually in like dividends, I'm going to go in the crypto space because the yield farming rates are far superior, even if I'm using stable coins. So Robert says no option buy. I actually do have 10 put options that I purchased for December on builders. So I'm thinking that the housing market is in turmoil. Housing market's starting to slow down. You're going to see building materials start to decline. Plus, we're heading into winter. I don't know. I went short on builders. And part of the reason was, here's a moving average. You guys can see this day right here. Right as it came up into this area of supply, which is a base drop. And it also was the 20-period moving average. So right as it hit $78, I bought 10 puts on XLB. The next day, of course, I was underwater, hurting on that one. And then we've seen the follow-through. And now I'm starting to see much more downside movement in XLB. Again, I have all the way until December 21st. I will not hold them past November 21st because that would give me 30 days to expiration. And I don't hold long options any closer than 30 days to expiration. So I've got a lot of time here. I definitely think the XLB is going to challenge the $70 mark. I've already have a great rate of return just in the past 3 days. Actually, the past 2 days have really given me a great rate of return on those put options. But there you go. That's the majority of it. There's a couple accounts. Someone actually mentioned my E-Trade account. I don't have my E-Trade positions in here, but give you guys a general idea of the positions that I'm in. Right now, again, the only ones that have a negative return are the QQQs themselves, but I'm also selling all kinds of options against that, which is lowering and eating away at that loss. The Tesla one was slightly underwater. Like I said, it was only like $100. I'm not concerned about that. I think I'll be fine with the Tesla 270, especially what happened in there today. So everything else doing great. And again, it's not like any of these are grand slams. None of these are, oh my God, you made 100x. I actually just sold one that was over 100x, which is great. That was on Luna Classic, LUNC, but I sold all of that a couple days ago, and I have nothing to do with that one anymore. So there you go. I thought that would help for Mario and for others. Stop bugging me. There you go. You got a glimpse of my portfolio. Now, I could be doing this like every week, but I just think that would be way too much work. And I don't know. I feel like it was important to share a little bit about what I'm in. I know that you guys, many of you, are far more involved with options and looking way more into the Greeks and all that stuff. I started to go down that route, but personally, I just kind of step back and go, I'm going to be a simpleton. Like Alan says, you're doing calendar to diagonals to offset premium decay? Nope, I'm not. I'm keeping it so simple, Alan. I am selling premium, right? I'm selling puts and collecting premium if the markets are absolutely falling apart and I see pain and I see people wanting to buy puts, right? It's like the house is on fire. I want to be outside going, yeah, I'll sell your fire insurance, but your premiums are 10x because I see your house is on fire. Yesterday, the house was on fire. People are running and saying, give me any option or put option I can buy. And I'm like, here, I'll sell you some. Boom. You're paying a huge premium. I love the big down days. But I don't do anything with theta or gamma or delta or all that stuff. Honestly, it just confuses me and I got way too much going on in my head. As you guys can see from the show, sometimes I have a hard time even remembering which screen I'm on, let alone all that stuff. So I could probably do better. I think I would be a much better options trader if I sat through, took the time and just, okay, let me sit through a Russ Allen's class and just pick his brain. Or, I watch a lot of the Larry stuff. Larry's great. I really enjoy Larry's approach to it, but I just want to keep it very simple. I'm going to buy directionally if I think something's headed that way, like XLB, I think it's going to be headed down. I buy directionally at least 90 days out. Give myself 90 days for it to work. With put options, if I'm selling them and looking for the premium, which is really becoming my favorite thing to do, is just collect premium, right? Get those income streams coming in. I'm looking at 30 days or less. If I can do them on a weekly, great. Sometimes I'll go a week and a half or 2 weeks, but never more than 30 days. I'm not going to sell a put 30 days out or a call option, right? I want to make sure I'm selling the ice cube on the hot day, and I don't want to give a lot of time for the buyer of my option, whether that's a put or a call, to have time on his side. Thanks, Maheen. Glad you like it. Nope, I don't look at delta when selling. I know I'm flying against what's taught in Online Trading Academy's courses. I mean, I think it's important for y'all to understand it and look at it. And I do understand delta and theta and greek. I understand that stuff. I just don't look at it. I know it sounds so bad. I just don't look at it. I look at what rate of return I'm going to achieve, and then I look at the market and say, okay, what's the probability of price getting to these levels? Now, I think delta helps you determine that, right? But I'm looking at a price chart. To me, the price chart is more important than looking at something like delta. But that's just me. All right. What time are we at? Holy cow, they almost made an hour show out of that one. Well, Mario, thank you for the question. I hope it was informative today. I have some other questions I need to get answered for everybody, but I hope that was informative. I'm not going to make a regular thing out of that, and maybe once a month I'll show you, but I feel bad because my positions change all the time. As you guys saw, a lot of those positions are going to be gone as of Friday, and, I don't know what I'm going to be in as of Monday. If the market gives me opportunities, I will seize those. If not, I will stay in cash for an unforeseeable amount of time until something presents itself that's not going to kill me, right? I want to make sure what I'm getting into is not going to be the end of the world. So like right now, the two riskiest trades I have by far are the Bed Bath & Beyond and the Tesla. Why? Because Tesla is a single stock. If the government comes out tomorrow and says we're banning all electric vehicles, I know it's not going to happen, but let's say hypothetical, Tesla's going to drop 50% or more. I could get absolutely killed on those positions. So generally, when I'm doing options like I showed you, you guys notice my list, it's mainly these guys on the right-hand side of the chart. It's looking at ETFs, XLV, XLI, XLF, B. I'm looking for diversified holdings so I don't get caught with a big loss. And I know that there's many of you right now that are using individual securities, and that's fine. I just think that there's a little bit too much risk there, and I have to back off my risk tolerance. Again, I think that if you look through the list of the most valuable players to ever play the game of baseball, they weren't the ones that took big chances. Yeah, you could say Barry Bonds and stuck a bunch of needles in his butt, and now he's the home run king. Put an asterisk next to his name, but look at the real ones, right? Look at your Joe DiMaggios. Look at your Lou Gehrig's. Look at your Derek Jeters, Didn't mean to mention all Yankees, but these are guys that got on base all the time, and they drove their team to championships. In this case, remember, trading's like golf. I'm the only one who's responsible for taking myself to the championship. And I can go out in that golf range and swing as hard as I possibly can. Well, I'll probably shank it into the trees. I'd rather hit it a lot lighter and be incredibly accurate and keep that ball right where I need it to go. And that, I think that's a big change. It's a big change that has happened to me over the years. And I love ETFs, man. Options on ETFs are probably the golden egg in my opinion, because you remove a lot of that crazy volatility that can happen on things like GameStop and Bed Bath & Beyond and AMC and all that trash out there. Anyway, that's going to do it for me, everybody. Here is the earnings calendar for tomorrow. For Thursday, I will not be here tomorrow. I am going to be doing a potluck with my colleagues at Online Trading Academy. Here's what's cooking for tomorrow. You can see here we have retail sales numbers, Empire State Manufacturing Index. Retail sales is key for tomorrow. They're expecting a contraction. That's not good. A negative retail sales number would not be good for our equity markets. You also have Philly Fed Manufacturing, which they're expecting to decline as well. Capacity utilization, industrial production, business inventories. It's a very big day for U.S. markets. We ended on a very positive note out there today, which I didn't get a chance to evaluate for everybody, but I got to get out of here before a 1 hour show transpires. We are actually on the shorter time frame charts pulling back just a hair. Here's the 5-minute chart of the Nasdaq, just so you can see what's going on right now. I'll get that moving average out of there. You know, we're baselining from that big sell-off we had, but it's making higher highs, so it's feeling rather positive. It looks like we could see some nice recouping of losses tomorrow, which is why I still have my long positions open, but those retail sales can derail anything in a matter of seconds. But trading isn't baseball, and the best traders often put on extremely large risk. Yep, but not all traders. I'm putting myself, I'm saying I am the base hitter guy. I have a couple times a year where I'll swing for the fences, but generally I'm not going to. Tom says, Tesla has many funds that will be propped up as traditional manufacturers pass them up. Yes. However, there's always single stock risk. I understand it's so diversified and it's in the indexes and it's in mutual funds and it's in these different products. However, anything can happen to a single stock. And while it may be dampened to some degree because of its inclusion in so many different markets and indexes, if Tesla gets all of a sudden a 20% hit, which could easily happen, your options are going to be screwed and really wonky. I'd rather be in something that doesn't have that 20% potential, like, stay with some of these ETFs. Anyway, do a live cast of the pot. Yeah. Telly's not bringing chips and soda. No, not chips. I got to figure out what to make. Now, I actually declined to do it because I wanted to do this show, but then that gave me a little bit of a hard time, so I guess I've got to go to the potluck. So, all right, everybody, that's going to do it for me. I will see you on Friday. I am going to have David Warner on next week, which would be cool. I'm hopefully going to get Ryan Watkins on the program as well. But I hope you found this informative. If you did, great. Feel free to hit that thumbs up button, subscribe button for anybody who might be new. If you are curious about something else, send your questions into the YouTube channel. You can just put them right down below, whatever video it is. Somebody was spamming the yesterday's show. There was like 57 comments. It was all spam from somebody, so I'll be removing those. But put your comments down below the YouTube video or email me at TraderMerlin@gmail.com, and I'll get all those ready for our Friday session. Hope you all do great in tomorrow's market. I'll see you Friday. Take care.